Morning, it's Vijay here. Today is Tuesday, 8th of April 2025. Welcome to yet another episode of Pre Market Commentary. Please note that I am not a SEBI registered advisor. So, whatever ideas I discuss, please don't take this as a recommendation. Please consult your registered SEBI registered advisor. If you like this kind of content, please share and subscribe. We are growing slowly but steadily thanks to your support. And if you want to give me some feedback, both critical as well as something good, kindly send in your questions or comments. I reply to every single one of them. So once again, thank you for joining. So let's go dive deep into the topic. If you remember yesterday, there were people talking of we will have a Black Monday, we will have a 20% drop, is what Jim Cramer said. And everybody here was talking about getting out at the open. Now, over the weekend, I'd got lots of calls and I asked them to wait for a day and then review the position. So, what would have happened if they would have waited? We will come to that. Before that, you see, there is a war going on here, and in a war, there are a number of battles. You win some, you lose some. So, if you're on the bullish side or on the bearish side, this is what happens. But generally, in the capital markets, we have noticed over the last 40 years that bears win battles and bulls win wars. Now, this is a big war, a long war, and there are a lot of nervousness, lot of confidence being shattered on a day-to-day basis. So one has to grapple with it. Being from Sainik school, I know many of my friends have fought wars, and I know how difficult it is on a day-to-day basis to win battle after battle and hopefully win the war at the end. So if you have faith in the system, faith in your stocks selection, faith in your mutual fund selection, faith in your asset selection, hopefully one should win the war, because generally, if you are positive oriented, you win the war. This is what my personal experience has been. Whenever I've been negative, I've won some battles, but ultimately lost the war. That's what bears win battles and bulls win wars. So let us see what happened yesterday. And before that, cues this morning was Nifty shed 650 points. It ended 3% lower. In fact, we were the best performing market in the world in terms of we have fallen less. This has, of course, been the biggest single drop in Nifty since June 4, 2024. That was the election results day. That day, Nifty it fell 7.5%. Actually, it fell 10% intraday and came down to close only at 7.7, which is more than double of what we fell yesterday. Bank Nifty shed 1,500 points. It's coming near the 50,000 mark. Bank Nifty continues to be better than Nifty, but yesterday Nifty beat Bank Nifty. We shall see the graphs. India VIX, which is the volatility index, spiked by 66%. Now at 22. 22 is still low. If it goes above 30, one can be bullish, because then you see that more and more people are getting bearish at that point of time. As a contrarian, one can be bullish only about 30. Right now it is 23, so it's even Stevens between the bulls and the bears. So across the board, we saw selling. So there is no sector spared yesterday. So there's nothing much to talk. Trent was a loser. Hindalco's metals were the worst affected, because a lot of speculative positions were there in metals. And yesterday volumes were the highest, and not the highest, were the highest in many months. 1,24,000 crores. Previous day was 1,03,000 crores, which itself was high, because typically nowadays you're doing 90,000 crores. From 90 on Friday with heavy selling, it went to lakh and three. And yesterday with extraordinary volatility, it went up to lakh and 24. Today also, I think you will have a very large volume day. May not be as much as yesterday, because I think lots of positions, especially the long positions, were cut yesterday. And so it was a very grim battle. So the FMCG index also lost. I mean, I don't think I need to talk about it. Dow Jones opened about 1,000 and odd points lower. Then there was some rumor that Trump will not, continue with reciprocal tariffs for some time, that 90 days. But then people said it is fake news. The White House said it is fake news, and then the market fell down about 900 points, and then finally recovered to close at a minus 350 points. S&P was flat. Nasdaq was just about there. So that was, it closed in the green, but only about 15 points. So that is what it is. There is a lot of fear in the market. People are talking of recession imminent, and if there is a prolonged trade war, then things will only get worse, or recession will hit our doorsteps faster. Dow Jones Future today trading about 60 points higher, but let's look at where we are on the global list. If you take from life high, Shanghai is down by 50%, Hang Seng down by 40%. Remember in October, when we peaked out in end September, people ran to China markets thinking that China is better valued than India. And now you look at it, China, Shanghai, and Hang Seng are at the top of the losers list. This is exactly what I tell people: do not just chase fads. Going into China, going into Hong Kong was a fad. India was a much more stable economy, and therefore we should have been having a stable market. But we continue to lose. Optimists like us were amazed at the kind of selling which was going on, and people moving to US, people moving to China and other parts of the world. If you look at it, Nasdaq is down by about 23%, Kospi 29%. People said, why not go to Kospi index? Dow Jones 15%. You see, DAX 16%, and Nifty is almost at the low end of the table at 15%. So we are technically not in a bear market, where Shanghai is in a bear market. Hang Seng, Kospi, Nasdaq, Nikkei are all in bear market. Yesterday, even S&P entered bear market, but the last half an hour, not last half an hour, during the day, it oscillated, and then the last half an hour it went into somewhat positive territory, and that is why it saved the blushes. But look at the funny and the interesting thing which happened. If you look at all the indices, Nifty, if you just look at Nifty, Nifty closed at the day's high, and people were talking through the day that things will get worse. Before the day, they scared the hell out of us, saying it will fall 10%. But if you look at the chart, that is what happened. Nifty closed at almost the high. Of course, Bank Nifty did not close at the high, but Bank Nifty closed away from the lows. Then you take the other indices, you take Nifty 500, which is the broader index, again closed at the day's high, though they all closed in the negative. Then you take the mid cap index, closed at the day's high, very steady and upward trend. Then you take small cap index, closing at day's high. All indices made their opening lows. So this is what yesterday was, a battle where actually the bulls won. If you had bought in the morning, then you, as an intraday trader, you would have made money. Our group did intraday trading only on the long side we are doing nowadays, and it was not a great thing for us to make money, because the large institutions supported the market. You see this micro cap, the micro cap index also much above the opening highs, small cap much above the opening highs. So all in all, yesterday actually the battle was won by the bulls. But today you never know; it can happen the other way. This battle was won independent of FIS selling 9,000 crores. DIS bought more than that, so DIS this one made the market steady. But after the market, there has been a fight going on between China and US. So we are all collateral damage here. So the PBOC is trying to weaken the yuan. In 2015, they had devalued the yuan, and there was a global crisis. So I don't know whether they want to devalue the yuan, but they are trying to keep it lower than the dollar, and they want to make the dollar stronger, whereas Trump wants weaker dollar. He wants lower yields and lower oil. He was getting it, but I think China is also selling US treasuries. If you sell US treasuries, then you see, then what will happen is the yield will go up. I think yesterday's rise from 3.88 to 4.16, the treasury yield, 10-year yield went up. So that probably could be because of China selling. So now this is a battle of the giants, and somewhere along the line, we have to be very cautious, I would say. Though we are optimistic, but as I keep saying, this is a war. You will lose some battles. Bulls will lose quite a few battles. It is not going to be easy. But if you keep the faith, you are if it's stock selection is good. Finally, this is nothing to do with the index. It is stock selection which will take you successfully to the other side. The waters are very stormy. We have a port, somewhere some leaks are there. We have to plug the leaks and keep moving forward. So there could be China flooding the world market with cheap exports. So that's game on for that. Whereas Donald Trump is talking about, raising further tariffs on China if China doesn't come down. So China is saying we should have a negotiation. Trump says we will stop negotiation and we will negotiate with other countries. They are already negotiating with Japan, and it looks like there's some positivity. Europe, which said that they will push some more sanctions. Now they have gone back. Their own reciprocal sanctions, they have gone back, and now you are seeing they are coming willing to talk. Israel was willing to talk. You've got about 60 to 70 countries willing to talk, is what Besant says. So Besant says, keep the faith. And Besant has met with Trump on Sunday. I think they have worked out some plan. And the plan will be, I suspect, to see that, they will take away, take the world away from the brink of Armageddon. See, tomorrow, for instance, if China or doesn't doesn't reciprocate what Trump is saying, or if they increase sanctions, so there will be volatility in the market. I'm expecting volatility. I'm expecting things not to be, smooth. There will be battles and battles. I still believe that the war will be won by the bulls. That may take 3 months down the line, but by April 15th, quite a few of the battles will be fought. We'll know which way the war is going by April 15th, as I've been mentioning again, time and again. So I am cautiously bullish. I was very bullish yesterday because I knew that, when the market opens with a gap, the only people who will sell are the panic-stricken people. And that is the time when the big operators come in. Yesterday, clearly the indices across the board showed that if you have bought at in the first 15 minutes, you have made money through the day. And that is what we did, as I said. So today I'll be much more cautious. It's not going to be easy for the bull, I suspect, though the Gift Nifty is showing there's a big gap up opening. I hate gap up openings because as a bull, I would like to buy only when others are panicking and not on gap ups. I don't like euphoria. So I'll just be cautious today. Actually, one should just not even trade today, in my opinion, as a bull. But then, because we are inveterate day traders, we need to be there all the time. So whatever you do, I hope it is successful. Thank you for joining me.